You had to lower guidance in April, then again in June, and then again now due to the stronger dollar. What's your level of confidence that this is the worst it'll be in terms of the dollar impact?
Yeah, good morning, Alex. It's a pleasure to be here with you. That's really hard to predict. Well, how we measure the performance of our management teams is really on operational basis. And if you look at the third quarter, all three groups within our company actually accelerated growth over the second quarter. To put it in perspective, it's been worth about 5 points of growth to the total company on a year-to-date basis. That's our outlook for the year as well. And then about 68 cents per share on the bottom line, so not insignificant there, about $1.8 billion. We do hope that there'll be some leveling off. We've looked at charts over the last 35 years. When you see such a precipitous move, and it's only happened 2 or 3 times over that time horizon, there usually is a leveling off. Obviously, the U.S. Treasury, with its tightening of a fiscal policy, needs the rest of the world to kind of catch up, and hopefully that'll occur in the coming quarters.
Joseph, one of the reasons, good morning, it's Guy. One of the reasons why the dollar is doing as well as it is at the moment is because we've got a relatively strong U.S. economy compared with the rest of the world. What are you seeing in that economy? What kind of headwinds do you think you're going to be facing? What's the position right now?
Yeah, so Guy, you may have noticed in our print this morning, we'd had about 170 basis points of gross margin erosion from the third quarter of last year. So we're dealing, just like every other industry, every other company, with inflationary impacts. That being said, a lot of our growth came from outside the U.S. We had 12% growth outside the U.S., 4% in the U.S. So what we know about healthcare and the business of healthcare is that while, really there's no immunity to a recession for any company, we think our business, our industry is much more resilient than most. So we think we're in pretty good shape for the outlook. We're managing the challenges now. The team's doing a great job minimizing the impact on gross margins through other cost initiatives. And we think we're well set up, not just to close out this year as we guided today, but for next year as well.
So that's the demand side. Joe, can you talk a little bit about the input costs and that rising inflation? Can you help me understand when you think inflation will peak for you guys? Or is it like a rolling ball of inflation? Does it pop up in one area and then go to another area and then go to wages, for example?
Yeah, so we're finalizing our plans for 2023. Some of the product we manufacture in 2022 will flow through the P&L in 2023. So you'll see that still persist. But I would think right now we don't have the, I would say, input constraints, so the availability of materials, that seems pretty much behind us at this point, and now it's really just absorbing those extra price or cost increases. I think those could persist for a little bit longer, but I don't see them getting much worse, and I would hope that as some of the forecasts on your show and others have indicated, maybe in the second half of next year we'll see an alleviation of that. I think it's much harder to expect a cost decrease when the prices have already been raised. In our business, obviously in pharmaceuticals and med tech, that is not an option to raise prices, but we have taken strategic price increases in our consumer business, and what's nice about it is the iconic brands we have there, customers still value and want those brands in their medicine cabinets.
In terms of the consumer spin-off, just update us. What is the latest on that? What is the timeline? Is everything on track from your perspective?
Yeah, really pleased, Guy, with the progress we've made internally in terms of separating those businesses. We aim to get to be with a company within a company and then have a capital markets transaction in some form yet to be determined in the middle of next year. We're going to update investors either late this year or early next year as to what our path may be. We've got a number of great options ahead of us. We did have the chance to name not only the company, but also a chair designate in Larry Merlo, who used to run CVS, to be the chairperson for that business. So we think we're very well positioned to have great success, not just for the new consumer health company known as Kenvue, but also the new Johnson Johnson made up of med tech and pharmaceuticals.
So to that point, how do you beef up the area of the drugs and device area? Is it going to be acquisitions, more deals, JVs? And I'm curious as to how you reconcile that with the current macroeconomic environment.
Yeah, so you just heard on our call from both Jennifer Talbert, who runs our pharmaceutical business, and Ashley McAvoy, who runs our med tech business, that our current portfolio of products, those that are on the market today, as well as those that are in the pipeline, is very, very strong. That being said, we had free cash flow generated year to date of over $13 billion. We feel very fortunate and are proud of the fact that we were able to distribute almost $11 billion to shareholders through dividends, as well as a share repurchase program announced last month. But we still sit on $34 billion of cash. So we're very aggressively looking at ways we can complement our portfolio with strategic assets that make financial sense.
Joseph, I'm hearing from other big vaccine makers that they're not seeing the demand going into winter they would have expected for COVID. What are you seeing? What is the future of that business within J&J?
Yeah, earlier this year, Guy, we suspended guidance on that product, and we only committed to those advanced purchase agreements that we had throughout the globe and meeting those. It was never really a financial driver for our business. We always focused on a much broader and much deeper portfolio. So for us, we're going to commit to fulfilling the obligations that we have, but really not much more than that. But I have heard something similar with respect to the demand for COVID vaccine apparently declining a little bit.